Hey folks, welcome to this week's edition of the Satori Traders Precious Metals News. Let's jump right into the charts. Gold in the monthly time frame we've looked at, not anything changing there. Still working on the right shoulder of that head and shoulders pattern. Here in the weekly time frame for gold, this is our Fibonacci retracement. And so we can see, we got this big bullish impulsive price movement, 62% Fibonacci retracement. We're kind of bumping along sideways from there. Last week's candle, fairly bullish. We've got price closing fairly, close to its high, not really close, but somewhat close to its high, obviously pushing into resistance at the 40-week moving average. MACD flat right at the zero line, energy in the mid zone. So, and again, something to point out here, we have a moving average crossover buy signal 3 weeks ago, something like that. So, and in the weekly time frame, that's a non-trivial indication. Let's reset this chart and back out a little bit. You can see that we don't, here we got some whipsaw. This is how you describe or could describe this price action, that these moving averages and price is whipsawing back and forth. And as traders, investors, speculators, it's easy to get chopped up and lose money when price is doing that kind of stuff. What we'd like to see is that we get a moving average crossover that leads to, a year or more of uptrend. And so anyway, let's keep rolling. This is gold in the daily time frame. Basically got price again pushing up into resistance. It's more of a support resistance zone with some confused price action. We can see that it has clearly acted as support. There's support, but it's also acting as resistance. And there's the resistance. And again, we can see for the last, 4 sessions, basically all of last week, that level was acting as resistance. So now MACD continues to be bullish. Both indicators are below zero, which is bear mode, but we've got a new buy signal in the MACD, and we're coming up off of this very oversold level. And then energy has reached the elevated stage and is still rising sharply. So bullish indications in gold, but we do have a lot of overhead resistance to overcome. So silver, this is the weekly time frame, nothing new here, just continuing to fill out this flag pattern. In the daily time frame, silver is dealing with resistance along this median line. It's a median line extension of this Andrews pitchfork, and bouncing clearly on support at the 200-day moving average, 20-day playing around in there. So this action pleases me in silver. It suggests to me that this was just a, sharp pullback correction, but price doesn't really want to go any lower. There's enough of an underlying uptrend that could be the extent of this pullback. An interesting point, I forgot to share it in the other video. One of the things that was accomplished in this big sell-off, this dramatic sell-off in the precious metals, is that the futures markets were sold off. And so the setup in the futures markets is bullish. Basically, the selling has been exhausted in the futures markets, and so now the most likely path in the futures markets is upwards. So that's a bullish factor on the precious metal sector right now. So mining stocks, this is GDXJ in the weekly time frame. I did not move the bottom of this channel. Obviously last week prices, testing the bottom of that channel, or what I'm assuming is the bottom of that channel. MACD flat, energy in the basement. Let's keep rolling. GDXJ in the daily time frame. Yeah, potentially some bottoming action. I backed out a little bit in scope on this vehicle because I wanted to see where this downtrending channel line was at currently. So remember that this is our, it ended up being 6-7 months correction. This was our downtrending channel that, it's present in most of the precious metal sector during this time frame. So potentially, if price really wanted to pull lower, if metals were weak for the next week or two, we might see GDXJ pull down all the way to the channel boundary, which coincidentally is a support resistance level as well. So anyway, we've got potentially some strong support below if price actually wanted to make one last flush to the downside, or if the market makers and whales wanted to if they wanted a payday, they might push price down to that next support level, ring the register, and then reverse their positions for a bullish up move. So anyway, not that I'm a cynic or anything. Here is the silver miners, SIL, in the daily time frame. So this looks like, potentially bottoming action along this support level. But again, another flush to the downside brings us into this potential support zone. We've got the lower median line of this modified shift pitchfork as well. Potential bottoming in MACD. Energy is in the basement, enough for the mining stocks. This is the US dollar in the weekly time frame, and so notice that price has been trying to push higher, but has been stopped by resistance at the median line of this Andrews pitchfork. And so we've seen that now 4 weeks in a row. Last week's candle in particular pushed up into this 93 area and found resistance there. And then obviously sellers came in and were able to push price, or the dollar, considerably. This is a bearish doji candlestick last week, and notice that the close is below resistance at this median line extension. So MACD potentially rolling over without making it into bull mode. So all of this upward action has brought MACD back into bull mode yet in the weekly time frame. So energy elevated, but potentially rolling over. Let's move to the daily time frame in the dollar. We had looked at last time this Fibonacci extension, and I pointed out that when we're using the Fibonacci tools, they are most accurate when we apply them to impulsive price movements. And so that's what we've done here in the dollar. If we use this as our origin and this as our first pivot, all of this, these 4 candlesticks are very bullish. This is an impulsive price movement. We get a pullback, which gives us our next pivot. We apply the Fibonacci extension to those 3 pivot points, and it shows us potential areas where price might run out of action and either move into a sideways action or reverse direction. And so potentially that's what we're seeing here in the dollar, is that we've reached the 62% extension level of this impulsive movement, and now price is rolling over. So these last 2 candles in particular are suggestive that, we're starting a downtrend. MACD looks like it could be rolling over. Energy is dropping. Let's zoom in on the MACD here. Do you want to call that a sell signal? It's certainly very close to a sell signal in MACD for what that's worth. So let's see, that's the dollar in the daily time frame. And of course, a falling dollar is bullish for the precious metals sector. So that's pleasing for me to see as a precious metals bull. In the weekly time frame, I was kind of expecting the dollar to push, maybe as high as 93.50 and then do somewhat of a significant non-trivial pullback correction, perhaps that is already starting. So it's hard to judge the strength of the dollar at this point. A lot of machinations going on in the markets. This is the yield on the 10-year note. Last week we got a pullback. Again, this is a Fibonacci extension of this impulsive price movement. We've got a 62% retracement last week, and then buyers came in and pushed price all the way up to here where we got our close. And so potentially this is bottoming off of the 62% retracement level, which coincidentally is the 40-week moving average, and that interest rates will now continue higher. And that is, I'm saying that based on my assumption that the interest rates are in an uptrend. The underlying trend is upwards. One of the factors that indicate that is MACD. Notice that both indicators are above zero. MACD is in bull mode, which suggests that the primary trend is upwards. Energy obviously is in the basement. In the daily time frame, this is some interesting action, price action, if you will. Obviously, this is interest rates or yield on a note. This appears to me to be a capitulation sell-off followed by a extremely bullish gap higher. Notice as well that this is a large open gap. And price in general pours a vacuum, does not like open gaps. And so the fact that we got this big downward movement and it found support without reaching this level, didn't have to test this level as support. See there how price gapped over this level and then continued higher. So in this downward movement here, we didn't have to come all the way here and test for support. We found it up here and then got this big bullish gap higher. So not closing that gap, in my mind, is a bullish factor. Obviously, the gap is bullish. So again, this looks like a capitulation sell-off followed by a very strong resumption of the underlying trend, which is upwards. Higher interest rates are in the future without outside influence. MACD is still down in a very oversold level, potentially turning back up. Energy in the basement, again, very bullish movement. Well, bullish from the perspective of higher interest rates. As consumers, that's not necessarily a bullish thing. So let's look at equities. So one of the things, kind of as a general what's going on in the markets this week, we had the FOMC meeting, was that last week or the week prior, and it was perceived as being hawkish because three of the Fed head thought they saw tightening on the horizon. What a joke. The reality is that interest rates are not going higher anytime in the future. It just ain't going to happen. Can't happen, won't happen, isn't going to happen. How's that for an absolute? But anyway, that Fed meeting was perceived as being hawkish. Of course, now they've backed off of everything they said. They're trying to convince investors now that they're back on the dovish side. So, go figure. It's just BS. It's blarney. That they only got two tools. That's the only two tools they've ever had is blarney, bullshit, and a printing press. And, there are variations of those two tools, but fundamentally, those are the only two tools they have. Enough of me blabbering. In the equity markets last week, obviously we had some very bullish action. On Thursday, this is a tremendously bullish doji candlestick with this long lower tail. MACD obviously in bull mode, appears to be headed higher and has a ways yet to go before reaching this level of the previous MACD high, where we might expect price to become overbought along with MACD. Energy obviously elevated. Round number target coming into potential play at 4,400. If we were just looking for what's our next Andrews pitchfork target, I'd probably say it was 43.90. But when price gets close to a round number like this, there's kind of a magnetic effect where price will get drawn into the round number. It's a human psychology thing, but we can think of it as price being attracted magnetically to round numbers. Let's keep rolling. So anyway, overall, equity's looking very bullish, extremely bullish in SPX. MACD potentially kind of flattening out, but darn, that's some very bullish action there. We can't fault the equities, SPX, if it wants to bump sideways for a little bit. The Dow came in Friday with a big bullish move. Notice that price in this candle is closing very close to the high of the day. That's always a bullish thing. And that it has pushed through, with the Friday's close, pushed through this resistance level from these prior, 3 highs. So we got 3 highs here at this level, and now Friday, it looks like we may pushed above that level. MACD is in bull mode and on a buy signal. Energy obviously elevated. So Dow is looking good. But notice that we're still just trying to get back to the level of this prior high, in contrast to SPX, which has made a long series. I think it's like seven or 9 in a row, new all-time highs. I mean, it's really incredible. In contrast to the Dow, which is really just, kind of ranging sideways. So anyway, we'll see if the Dow can continue higher, what it chooses to do or is able to do at the prior high there. In the Nasdaq, bullish action, so we can see, price reached resistance at the median line of this Andrews pitchfork, had to bump sideways, was able to push higher decisively, and then found support, tested support along that median line, and then continued higher for a few days before pulling back. This is, that's Thursday. We got to pull back to that support level, breakout level, if you will, and then a bullish continuation on Friday. So this is bullish price action. But if we look here at MACD, we're way up in this overbought level. I've described this several times that, MACD is not a bounded indicator, but prior highs and lows tend to act as range limiters. And so here we are again at the overbought level in MACD. So Nasdaq may struggle some this coming week to get any higher. In Brent, we got this big pullback, but very strong move to the upside after testing support at the 50-day, or, we didn't get all the way down to the 50-day moving average, did not reach this support zone either, and of course that's all bullish action. Brent was able to find support with testing these levels. What did act as support was the lower median line of this Andrews pitchfork. So price tested support there, found it, bounced higher, and appears that this price move could continue higher. MACD is on a sell signal, but clearly in bull mode. Our price target at 80 remains, although from a Andrews pitchfork perspective, our next objective is to get back above the median line. So, we need to see 77, 77, price push up above that level, find support there, and then push on higher. One last chart, Bitcoin. So Bitcoin, in my mind, it's still in a downtrend. The most bullish I notice in the chart today is a potential divergence between the price action and MACD. So if we look this vertical line, MACD has potentially bottomed and started to rise, while the price action in general continues lower. And so that's a divergence, potentially a divergence between price and MACD, and that can mark the end of trending movements. In this case, obviously, it's the downtrend in Bitcoin that we were talking about. From a technical perspective, we have to acknowledge that we have a series of lower high, lower low, lower high. Potentially, we're waiting for our next lower low. So, that's the definition of a downtrend. Anyway, so it's still on the sidelines for Bitcoin. A spike lower that filled this gap would certainly have me interested in a potentially speculative position in Bitcoin. So, all right, folks, I'm cutting it off here. Have a fantastic week. Talk to you soon.